Offer and compromise, settle with the IRS for less. You've probably seen those commercials promising to settle your tax debt for pennies on the dollar. And it sounds too good to be true, right? The truth is, it's possible, but only if you qualify. In this video, I'll explain exactly what an offer and compromise is, who qualifies, and how to avoid getting burned by bad advice. Those advertisements are usually too good to be true. I'm tax attorney Chad Silver, founder of Silver Tax Group. I've been practicing tax law for over 15 years, and it's the only thing my firm does, the only thing I'm interested in. We live and breathe tax defense. My team and I have helped thousands of taxpayers across the country reduce or eliminate their IRS tax debt through legitimate programs like the offer and compromise. We will build your offer and compromise, we'll submit your offer and compromise, and we'll defend your offer and compromise if necessary. Okay, now let's talk about the real offer and compromise, how it works, and how to know if you're a candidate. An offer and compromise, or OIC, is a formal agreement with the IRS that allows you to settle your total tax debt for less than you owe. It's designed for taxpayers who simply can't pay the full balance and would face financial hardship if forced to do so. When accepted, it gives you a fresh start. The IRS wipes out the remaining balance once you meet the terms of the agreement. Who qualifies? Not everyone is going to qualify for an OIC or an offer and compromise, and that's where many taxpayers get misled. The IRS looks at three main factors. Okay. Ability to pay. They look at your income and your expenses. They're going to look at actual paychecks. They're going to look at actual expenses from your telephone company, from your cell phone company. They really want to see what's going on. Equity and assets, property, vehicles and bank account investments. They're going to want to look at your statements to see what's going on in your financial account. And if you don't turn them over, believe me, they already have access to it through sophisticated computer and LexisNexis searches. Now, they also want to know your future earning income potential and what the IRS thinks you earn over time. If they think that you got laid off and you have a reasonable ability to get new work, they're not going to grant that OIC. They're going to say, hey, we'll put you maybe into a hardship for now, but when you start working, you're going to have to start paying. We're going to have another conversation with you. If after reviewing all that, the IRS determines it can't reasonably collect the full amount, they'll consider settling an offer for less. How the IRS calculates your offer. The IRS uses a formula called Reasonable Collection Potential, or RCP. It's based on your monthly disposable income, that's income after expenses, allowable living expenses, and asset equity. Basically, your offer has to at least equal your future income potential plus available assets. This is why professional preparation matters. Knowing which expenses qualify and how to properly document hardship can make or break your case. Real examples. One of our clients owed over $250,000, $250,000 to the IRS. Their business had collapsed during COVID and they were being hit with wage garnishments. We reviewed their finances, filed an offer and compromise, and got it accepted for just over $18,000. That's not a promise or a guarantee, but it's proof that the program works when done correctly and honestly. And there's a couple different types of offers and compromise. There's actually three specific types. There's doubt as to collectability. This is the most common, where you simply just can't pay in full. There's doubt as to liability. You disagree with the amount the IRS says you owe. And then there's effective tax administration. You technically could pay, but doing so would cause you an extreme financial hardship. Most people fall into the first category, doubt as to collectability. Common mistakes to avoid. Here's what most taxpayers get wrong. Submitting an offer without filing all required tax returns. The IRS will automatically reject that offer. So basically, you have to make sure you're in tax compliance. And I see this happen all the time. Offers sometimes take a while to process. So you could have a current unfiled year or an old one you didn't even know about. Ignoring current estimated taxes or withholdings. You must stay compliant while your offer is under review. And I can't tell you how many times that has come in and destroyed an offer. Using cookie cutter pennies on the dollar companies that don't actually calculate your real eligibility. They'll get a sales guy on the phone and say, oh yeah, Mr. Smith, you qualify. Take your money, put the package together, submit it, and it'll get rejected. Remember, a properly built offer isn't about luck. It's about proof and math. Step by step, how it really works. Here's what the process looks like. File all missing returns and stay current on new ones. Gather your financials, your pay stubs, bank statements, mortgage, car payments, business records. Complete Form 656 and Form 433A OIC for individuals or 433B for business. There's also an application fee of about $205 plus the initial offer payment, usually 20% for lump sum offers. Sometimes they'll waive those fees if you have very low income. Submit the package to the correct IRS unit. We do this every week for clients across the country. Once submitted, the IRS will pause active collections while the offer is under review. That's often months of breathing room for our clients. While you wait, what to expect? An OIC review can take anywhere from 6 to 12 months, sometimes longer, especially during government shutdowns. During that time, you must stay fully compliant, file on time, pay current taxes, and don't take on any new tax debt. If you default on any of these, the offer can be revoked and the IRS will come right back after. If you default, the offer can be revoked and the IRS will come right back after you. And then you've got to start all over, and it's a lot of paperwork and it's a lot of stress. If you don't qualify for an offer and compromise, don't give up. There's other solutions available. Silver Tax Group, we often can help clients with installment agreements, currently not collectible hardship statuses, or penalty abatements, all of which can provide real relief and stop enforcement actions like garnishments or levies. If you owe more than $20,000 to the IRS and want to see if you qualify for an offer and compromise, call us now at 855-900-1040 or visit us at silvertaxgroup.com. You can also visit our website where we have a 24-hour chat available. We'll review your case, we'll calculate your true offer potential, help you submit it the right way. And if you don't qualify for an offer, we'll figure out what your options are and help you through the process. I'm tax attorney Chad Silver, founder of Silver Tax Group. We build your offer, we'll submit your offer, and we'll defend the offer if necessary. Don't wait for the IRS to take action. Take control of your future today.